So we're going to do a quick update on the state of the short-term rental market. Here's a brief overview of the agenda. So we're going to look at current booking trends, correlations between our data and what was released by Airbnb in their S1, forward booking trends, supply trends, and then demand and revenue trends. So yeah, recorded bookings for February. Stays during the month of February is what we're looking at here. So people who actually reserved a property and had the booking during the month of Feb, and comparing that with new bookings that took place in the month of February for dates in the future. It's definitely of note that the difference between new bookings and stays is the biggest that it's ever been. So people were booking more stays for the future than ever before. And most of these record bookings were taking place in the US. Yeah, so in Europe, things are picking up, but not quite as quickly. We also continue these trends to continue to grow as restrictions ease, because many of these new booking trends are due to eases in some of the lockdowns that have been taking place. I'll briefly chat a little bit about AirDNA and kind of why you should listen to me at all. So who is AirDNA? We collect short-term rental data, particularly for every single listing on Airbnb and Vrbo globally. So that's about 10 million properties. We then also have an extensive data partnerships program where we're receiving daily reservation data from just over 1 million properties through channel managers or PMSs. As well as through about 40,000 individual hosts, which helps us inform our data collection as well as our reservation algorithms to make sure that it's as accurate as possible and make any necessary adjustments for differences in booking behavior over time. I'm going to pass it over to Jamie quickly just to go over the next couple of slides.
Great, thanks, Sarah. So my name is Jamie Lane. I'm the VP of Research, and I recently joined AirDNA back in last November. And one of my first sort of projects was getting understanding of how our data aligns with what Airbnb reported when their S1 came out in November in the lead up to their IPO. So a common question is, does our data align with what Airbnb is reporting? The simple answer is yes. We think it does. And I'm going to walk through some of those correlations of some of the top line figures from the data that they've released and how that aligns with ours. It's important to note that our data set does track, though, all bookings that happen at a property that's listed on Airbnb, and not just those that are happening through Airbnb as a channel. So when looking at our data, our sort of raw figures of bookings revenue is always going to be noticeably higher than Airbnb's. But when we sort of re-index, and what I've done here is indexed both series compared to average revenues for 2019, and then plotted them against each other. So in general, we can see they match up extremely well with a correlation of over 97% over the past 3 years. I will note that there was a slight disconnect in Q1 and Q2 of 2020, which we can partially attribute to Airbnb's sort of overweighting to urban areas, which were disproportionately impacted by the pandemic. But also to cancellations and property removals, travel bans during that time, which made it difficult to ascertain if reservations were actually happening or not. But I think most importantly, in Q and Q3, we've seen our data realign with Airbnb's performance as booking behavior has normalized. And the strong correlation definitely maintains when we look at the year-over-year trends. We've also added an additional line in yellow where we re-index our year-over-year changes based on our current quarter estimate compared to Airbnb's reported figure from the prior year. Sort of cancels out any prior disconnects and really gives an indication of where our current numbers align with expectations. And here we see where our Q4 2020 revenue estimate of 22% would have put us within 0.5% of Airbnb's reported revenue for the quarter, which was much closer than what consensus was prior to Q4 earnings release. On the next slide, we see how that relates for booking nights. And the same correlations generally hold for these quarterly figures. The important thing to note here is sort of the adjustments for cancellations and how Airbnb gets to their gross nights booked. And absent those sort of mass cancellations that we saw in Q1 and Q2, Airbnb's sort of net and gross figures that they did release in their S1 very much aligned with each other. And we can see that in the 2018 and 19 figures, sort of gross is in red, net is in green. And they do disconnect in Q1 and Q2 after the removal of all those cancellations. But we do expect those lines will match up again in the future and allow us to really do, I think, a great job of predicting future gross booking nights. And on the final slide of this sort of comparisons, we look at gross booking value in the three lines again aligned. Our figures of total gross bookings in each quarter, along with Airbnb's sort of headline gross booking value in green, and then in red, the reported gross bookings before cancellations, which our figure is going to align much more closely with. But as I said on the previous slide, once those sort of cancellations get moved past, we do think our figures are going to very much align going forward. As we look at January and February, we have seen a deceleration in revenue growth in Q1 as people have, as travel has really not picked up. We did see the cases increase in the US through November and December, which saw a deterioration of performance. And it's just a quarterly sort of seasonality mix. In Q1, we generally see almost 50% of demand in cities that shifts back towards destinations in Q2 and Q3. And we expect with that shift back to destination travel, leisure travel, that demand should pick back up, especially with vaccines being rolled out and the total reservations picking up again, as Sarah mentioned at the beginning. So Sarah, back to you.
Cheers, Jamie. Yeah, so let's look at some outlook and forward booking trends. So this is new bookings that are picking up for the US, as Jamie just sort of went through. When you look at particularly spring break and summer travel, we're really only down about 10% off the booking pace for 2019, which is really strong. This is also considering that there is a much shorter booking window post-COVID than even there was previously for short-term rentals. In Europe, the numbers are still fairly down, unfortunately, likely due to lockdowns. But you know, all hopes are up for some of the summer months as the vaccines are continuing to be rolled out. So you know, as I just mentioned as well, another trend that we're seeing is that people still are not booking that far in advance. So there's a lot of last minute bookings taking place, but really those occupancy rates are looking pretty good for the first bit of the year compared with last year. So what we're seeing here is a huge, and I think I talked about this in my original talk a few months ago, there's a huge pickup in destination markets. So this really is where the majority of the growth is taking place. Whereas if we're looking at major urban markets, it's 80% lower than 2019 levels. So that demand definitely has not recovered yet in those major urban markets. And I'll pass it to Jamie quickly just to run through a couple of different definitions of supply between AirDNA, Airbnb, and the different ways we can look at it.
So in Airbnb's S1, we got a sense of how they wanted to report their supply figures. And the two metrics they released were total listings and active listings. And we can very much align with those over the past sort of 5 or 6 years that we've been tracking Airbnb performance. We do see over the past year and a half, there was a decline in total listings on Airbnb platform through mid-2020, but we have since recovered essentially fully to now have well over 7 million listings on the platform. Roughly 5.6 million active listings. So those are listings with at least one booking on the platform. Now, those diverge with how AirDNA has traditionally tracked supply. And I wanted to show how our traditional ways of tracking align with those measures as well. So while 5.6 million listings have had at least one booking, only 4.1 million have at least one day of availability or one night booked in that month. So as of February 2021, we only had 4.1 million active listings. And then of those, only 2.2 million had at least one night booked during the month. That is up from sort of the low point that we saw during April of only 2 million listings with a booking, but it is well off the sort of peaks that we saw in 2019, where we had almost 4 million listings with at least a booking. And when you look at the sort of recovery that we saw in mid-2020, we're still well off those 2019 levels. And for these to really recover, we're gonna have to see a strong recovery in demand to get there.
Cheers, Jamie.
Mm-hmm.
Yeah, so sort of the bright spot of that is that Airbnb has been able to recover to pre-pandemic supply levels with the addition of these new units that have been coming online since the pandemic to meet the demand. So how are these new listings comparing with sort of long run averages? So you know, in the winter months, we really were only at about 150,000 new units added, which for Airbnb to grow at the level that we would expect, that they were sort of at pre-pandemic, that pace is still going to have to pick up as it relates to new units added. But there's no doubt that that Airbnb's sort of new host campaign that they've been putting up recently has definitely contributed to some of this unit rebounds. So changes in supply in the top markets for Airbnb. So these markets went from about 22% of revenue globally in 2019 to 10% in the back half of 2020. And something to keep in mind is that really for Airbnb's growth to truly recover as it was pre-pandemic, we're going to need to see demand and supply pick back up in these markets. The good thing about Airbnb is that the supply is quite elastic. So as soon as demand picks back up, it will be fairly easy for these units to come back online again. So sort of the big winner throughout the pandemic really has been Vrbo. This is really just because of where their supply already existed. Vrbo's supply has always been majorly in destination markets, and that happens to coincide with the majority of demand post-COVID. Airbnb's focus on cities has had a bit of a negative impact on them in 2020, but it's also going to allow them the opportunity to grow much more quickly in 2021 and 2022. So let's talk about some demand and revenue trends. So no surprise here, globally, demand is down pretty much everywhere. There's some areas that are less down than others, but you know, overall the numbers are down. However, the good thing about AirDNA is that we have access to property level data. So we have the possibility to look at demand for different types of markets. So here's some of the examples of how Jamie has been breaking out different markets across the US so that we can look at these supply and demand trends. And here's an example of kind of how we're looking at this. So, taking a market like San Francisco area of California, and really breaking it out into around that major city center, what are the different types of markets there, and being able to look at how that demand shapes up. So again, destination markets really dominated in 2020. That's where most of the increase in demand came from, whereas in urban centers it was down quite significantly. Something else of note, most likely linked to the fact that that there's greater demand in destination markets, the length of stay has increased. So number of trips that were longer than 7 days has doubled since the pandemic. So over the last year. This, as I mentioned, it's also tied to the types of demand that we're seeing. So for more of these rural destinations where, maybe you're going not just for, a couple of days holiday or for a work trip, but people are going and staying for longer, maybe taking the family, school is online, work is online. And so they're really taking more of that flexibility. And again, we see this in the trends of, increase in sort of these destination rural markets. So here, what we're looking at is the percentage of bookings that were happening via Airbnb's platform. So for example, this is by host type. So what we see is that for hosts that have one unit, historically, you're looking at almost 70% of their bookings are taking place on the Airbnb platform in the case of North America. Whereas multi-unit hosts are listing on multiple platforms. This is no surprise. So a smaller percentage of bookings of these properties managed by multi-unit hosts are coming from Airbnb. And this is probably a main driving factor in why Airbnb is really focused on growing single unit hosts. So they're really after people who have one property, two properties, and trying to increase new units from there, because they know that means the majority of the bookings are going to come directly through their platform. So, again, with sort of that same theme, what we see is that multi-unit hosts are controlling a greater share of the revenue. So even though they only represent just under 25% of all the units, it's over 60% of revenue. So this share of revenue of multi-unit host is definitely growing. Jamie, do you want to pop in and talk about host retention a little bit quickly? I think we've got.
Yeah. So I thought one of the more interesting stories that Airbnb told in their S1 was around how they were able to retain host revenue at essentially 100% by different cohorts. So we wanted to see if we could replicate that analysis in our data and tell some of the underlying trends of how they were able to retain that revenue. So the example I want to walk through here is essentially looking at the 2015 cohort, where Airbnb showed by year 4, they were able to retain 93% of their revenue. And we were able to essentially completely replicate that with our data set. The 2015 cohort we shown was retaining that revenue. But when we look at the number of hosts that were part of that cohort, they were down almost 50%. We saw 50% less hosts that had started in 2015. So the question was, how were they able to keep that same level of revenue with double the number of hosts? And the answer sort of tells a story on how Airbnb has evolved over the past 5 years. One, we saw the number of units being per host increased by 40% by year 4. So in 2015, the average host had around 1.8 units from that cohort, and that had increased to roughly 2.5 in year 4. So we see more units per host. On the next slide, we see what happened in total revenue for those hosts. And that really tells the rest of the story. Where in year one in 2015, the average host was running at about 48%. And by year four, that had increased to almost 56%. So a 20% increase in occupancy for those same units. So in general, those hosts had more units and were seeing much more demand per unit. Additionally, we saw the ADR that those hosts were able to charge increased 20%, 19% by year four. So overall, we saw a 40% increase in revenue per available unit over that 4-year period. Combine that with the increased number of units, ties back to how we were able to see hosts retain sort of that host cohort retain total revenue, even while having half the number of hosts over that 4-year period.
Perfect. Cheers, Jamie. Yeah, and so kind of the final thought here was the significant market share increase that short-term rentals saw over 2020. And sort of the real question that we're left with is if this share is going to stay, or is it going to shift back to hotels as people begin traveling to cities again? And so this is really what remains to be seen. But what we know is that short-term rentals were able to gain a significant amount of market share throughout 2020, sort of due to the pandemic in a way. Awesome. So that's it from us, from our prepared content. I'll pass it over to Richard. You've got our contact details here if there's any questions afterwards. And I'll pass it over to Richard for questions now.
Great, thanks, Sarah. Thanks, Jamie. That was great. So just a reminder, we've got a few questions in there already, which is great. But if you want to ask questions, please do use the Pigeonhole app, or if you can't find the link to that, then feel free to email me. I'm just going to start off with a few of my own questions, if that's okay. And I'm just going to ask about the recent sort of advertising campaign from Airbnb to go after hosts. And how much you kind of at one point in the presentation mentioned you thought supply was pretty elastic. What are the limitations there? Why do they need to go and advertise hosts if it is elastic? And is it maybe about that that need to sort of shift back towards more of those kind of individual hosts?
Yeah. Jamie, you want to, I saw you come off mute.
Yeah, no, I'm happy to take that one. And we do think Airbnb's got the supply to sort of drive their revenue recovery in the near term. So only 2.2 million units listed out of their 7 million on the platform. They've got a long runway of gaining occupancy and ADR to drive their recovery. The question for us really is once demand fully recovers, how do they get back to the growth rates that they were at sort of prior to the pandemic of growing 20, 30% per year? And we think a lot of that has to be driven by new hosts, new units being brought onto the platform at the rate that they were prior. And if they're able to do that with individual hosts as opposed to multi-unit hosts, big professional operators, as was driving the majority of their growth sort of in 2018-19, we think that can be and drive a lot higher revenue growth for them. So it doesn't surprise us at all that they're making that push. The question will be are they going to be able to attract enough new individual hosts to really drive the growth that they want?
Yeah, I mean, I guess probably sort of following up there on your slide 28, clearly there's been a rapid rise in the revenue share that's coming from hosts that have 21 plus properties. I mean, how much of a risk factor is the sort of increased professionalization and consolidation at the property level to Airbnb? Those. I think we've seen consolidation, some big moves among some of the management companies, and they get big enough that they can kind of become sales platforms themselves. Is that a risk? Do you think that Airbnb should be conscious of?
Yes and no. So on yes, the majority of this sort of increased share to multi-unit operators pretty much all has to do with where Airbnb had been growing in 2018 and 19, adding more and more units in destination markets where these professional operators had a presence already. So it wasn't that these were necessarily new units to the short-term rental ecosystem. They were just adding Airbnb as a distribution platform for those units. So I think on that, that's a great thing that these operators saw, and Airbnb was where guests were wanting to book, and they felt the need to bring those listings onto Airbnb. If we looked at the same share trend over time for just urban locations, you really don't see the same trend of multi-unit operators taking a greater share. You see it somewhat, but definitely not as pronounced. So in the urban areas where Airbnb sort of maintains their greatest percent of exclusive units, we haven't seen multi-unit operators take as much share, and Airbnb's been able to maintain their dominance. That may be a question going forward as these other platforms try to push into cities. But for now, that's sort of a bright spot that they've been able to maintain their exclusivity. And if once demand starts to return to cities, they'll be able to capture a vast majority of that revenue.
So maybe just kind of coming on to the kind of competitive environment as you see that kind of going forward. I mean, you mentioned that VRBO has been in a sort of sweet spot. I mean, what are the prospects of VRBO kind of becoming more of a challenger in those urban markets? And then we've kind of talked about, we've seen Booking.com kind of talk more aggressively about getting into the US. They see private rentals as a way to kind of get a stronghold in the US. How much kind of spare property capacity is there for Booking to go after? Is there a sort of noticeable gap that you could kind of see them filling in the market that's left?
Yeah, and we haven't seen Vrbo make much inroads in urban locations, and we suspect that wasn't probably a priority in 2020 for obvious reasons. But as demand comes back, that may be more of a priority as demand shifts back. And it's yet to be seen, and it's something we'll definitely be keeping an eye on, given our ability to track sort of listings across the platforms. In listening to Booking's earnings calls, I didn't get a sense that they were looking to go after individual hosts or even hosts in sort of urban areas, that it was primarily around the large multi-unit operators that are operating in most of these destination markets, that Airbnb is already competing with VRBO, direct booking sites. There is a lot of competition, and probably looks a lot more like traditional hotel distribution competition, and that if Booking does make a push into these, and given that such a small percent of those bookings are probably coming through any one channel, they're probably not going to make a big dent on any one, and it probably won't be a big impact on Booking too, and given that there's so much competition to get that demand.
Just a question from the audience. How do you think about the mix impact in 2021 of more bookings going to resort and coastal locations on the revenues?
And that was a trend we saw in 2020. Essentially, as soon as COVID lockdowns went into effect, and people started to make booking for summer travel, essentially all of that mix shifted towards destination markets. given that Airbnb had made inroads on getting to those locations, they were able to capture a good percent of those bookings along with Vrbo. That mix shift is, and we'll see it in the data through Q1. But once we start lapping Q2, Q3 sort of performance indicators, it's very much going to be and like for like in terms of what the shift looks like. And that's going to mean and probably declining average ADRs as we look at sort of the ecosystem as a whole. But we do expect in the back half of the year, back half of 2021, bookings to start picking up in sort of the urban centers, suburban areas. That's, I think, going to be a net positive for Airbnb and compared to Vrbo. And also as we look at the hotel ecosystem, as people have sort of ventured back into travel over the past year, it's obvious they've felt more comfortable in being able to rent out their own home, be in their own apartment, given that they're staying longer, they can use a kitchen, prepare meals on their own. And as business travelers sort of get back to the road, we think it'll be interesting if that share shift holds, or if we see some travelers sort of try Airbnb or Vrbo for those sort of more traditional business trips that might have gone to hotels in the past.
So I'm just wondering, a question from the audience, but do you have any data of how many days hosts are listing their properties on Airbnb now compared to pre-pandemic? Is there any increase in the days listed per host?
Yeah, I haven't looked at that, but one of the trends that can maybe point to it is looking at our sort of, we call like active supply compared to the unit, average number of units in a market. And one of the more interesting trends that we see, especially in the destination markets, where there has been so much demand, is a slight decline in the unit counts and a even more pronounced decline in the available supply. What that means to us is that more people are blocking out nights, and we suspect that that has to do with, and these are primarily people's second homes, and they've seen a lot more use of the owners during the pandemic as people are actually looking to use their second homes more instead of just using them as an investment property. So that has caused a dramatic increase in occupancy as demand has gone through the roof. Supply has actually contracted and really allowed existing operators to significantly increase their rates. And likewise, we see that in cities as yes, there's been a slight supply unit contraction, but a much more pronounced and overall available listing contraction as people make those units available less number of nights. And we suspect a lot of that may have to, maybe because of other use types. Maybe they're renting it on a long-term basis, 3 or 6 months, and haven't removed the listing, but it's just not available for rent at this moment.
Makes sense. Just moving on to sort of Airbnb as a hotel distribution channel. I think some of the work that we've done, we've seen that, in New York, 8 of the top 20 listings in New York were in fact sort of boutique and other hotel stock. Do you have any sense of what proportion of Airbnb's revenue is hotels now, or what proportion of its listings, and what's kind of spurred the move into that space? Is it coming from some of the trends you pointed out that they're actually seeing some supply decline in some of their top 10 cities?
Yeah, and it was a trend that we had seen and really play out 2018-19 as Airbnb opened their platform for hotels to start listing on the platform. It's not and something we saw as a really big pickup for Airbnb. It was, if there was 7.4 million listings at the peak, there was maybe only a few percentage points that accounted for hotels. It's something in general. When in actuality, when you look at any of our data as we report it, we exclude hotel and hostel listings just because we don't have good visibility into the revenue that they're earning. Not to get too technical, and if you've got 20 units behind a listing on Airbnb that represent a hotel room, we're not able to accurately track that listing getting rented in our data set. From our understanding, it makes up a very small percent of total revenue. So as we track it, is probably non-material in terms of overall performance.
And maybe just the same question on the experiences. I mean, that was obviously a point in the S1 where they focus on experiences, both travel and kind of domestically focused experiences as a great opportunity. Are you going to begin to track that? How significant do you think that business opportunity could be for Airbnb going forward?
Yeah, it's something, and obviously they didn't break out the performance of experiences in their S1. We'd seen media reports where it was as little as 30 million of revenue, given and that's less than 1%. And it hasn't been a priority for us. But as we see it, if that begins to pick up, and we'll start tracking it, but at this point we're not tracking it as it makes up such a small percent of overall revenue for them.
Great, that makes sense. Maybe just a lot of sort of column inches in the hotel space are focused on how hotels can sort of make themselves modernize coming the other side and make themselves kind of more kind of work from home destination or work from anywhere destinations, and maybe on the sort of private rental side, what do you see that the Airbnb sort of property portfolio needs to do or can do and will do to sort of modernize to be for the sort of post-pandemic world? Is there some technology that you think we'll see as more commonplace? Anything around, kind of cancellation flexibility that you think needs to change more permanently? Anything you think changes as a result of the pandemic?
And one thing that we've seen as a result of the pandemic is sort of prop tech within the short-term rental industry really accelerate. And you saw it in the hotel industry and sort of same trends of contactless check-in. And it was always, you could get a code and be able to open your unit. And that type of check-in where you don't have to interact with someone, it makes it a whole lot more efficient for the operator. We'll definitely have seen and will continue to see that over time. Also, and just marketing and of how you can actually work from these units. So what is the internet speed? What does the desk and chair options look like for working? Just the fact that they have a kitchen really makes it attractive for people looking to stay longer and allow people to live and work from different locations around the world. And that's a trend that Airbnb talks a lot about. It's a trend that we've seen in our data set as length of stays and long-term bookings have really increased. And we expect as people do start to travel again for work, maybe a 2-day trip to a different city turns into a week-long trip because you can sort of much more easily mix leisure and work when you don't have to get back to an office, or at least have a lot more flexibility with whether you have to be in the office or not.
So maybe just one final question. On your slide 21, one of the numbers that sort of jumped out to me is France down 23%, whereas the other European countries all down in the sort of mid to high 60s. Anything you'd particularly call out about France as to why that seems to be sort of bucking the trend of the rest of Europe?
Yeah, and it's primarily in looking at the cities that are performing well. It's cities along the southern coast of France. So Nice, Cannes, and I think just a large percent of overall short-term rentals that are in these destination markets that are relatively high performers. And we see demand in many of these locations up and well over 50% on a year-over-year basis, which has been able to sort of mask the steep declines that we see in Paris and some of the other major cities in the market.
Great. Well, look, I think that's our time up. Apologies if there are any questions I didn't get to. Please feel free to email them to me, or you saw Sarah and Jamie's contact details. So thanks everyone for joining us today. Thanks Sarah and Jamie for presenting. Any final words that either of you'd like to mention before we sign it off?
And I would say one of the new products we have since the last time we were on the phone was a global trend report, sort of tracking these overall metrics that we release every month. And it's a sort of a great new report that we have to sort of get these underlying metrics, track these trends on a monthly basis and get it on your inbox every month, which Sarah would be happy to walk people through.
Great. Thanks very much for that. Well, thanks again, Sarah and Jamie. Thanks everyone else for joining. If you've got any follow-up questions, please let me know, and enjoy the rest of your weeks. Thank you.
Awesome. Thanks.
Good.